Good evening, and welcome to the AJP Northeast Asia market close. A global bond shock hit the region's technology trades, but Korea took the heaviest blow as foreign and institutional selling converged on its semiconductor giants. The common pressure across Northeast Asia was higher long-term borrowing costs. US 30-year Treasury yields had reached their highest level since 2007, while Japan's benchmark yield remained near a three-decade high. Oil above $90 a barrel, with the Strait of Hormuz still disrupted, added to inflation concerns. But the damage was uneven. Korea was hit hardest because Samsung Electronics and SK hynix dominate both the KOSPI and the artificial intelligence memory trade. Japan also fell sharply, led by SoftBank. China declined as well, even though its own bond yields are falling on weak domestic demand. China also produced a day's exception. Humanoid-robot maker Unitree surged nearly sixfold on its Shanghai debut, while the broader market sank. The KOSPI closed around 6,466, down nearly 6%. Retail investors bought a net 4.5 trillion won, while foreign investors sold about 3.4 trillion won, and institutions sold roughly 1.2 trillion won. Domestic individuals were absorbing a large exit by both major professional investor groups. Samsung Electronics fell nearly 8% to around 247,500 won, or about $177 a share at 1,397.9 won to the dollar. SK hynix dropped almost 10% to around 1.5 million won, or roughly $1,073, making it the clearest expression of the unwind in the crowded AI trade. Samsung Electromechanics fell about 3.7% to around 1.39 million won, or about $992, outperforming the two memory giants in the broader index. A sell-side sidecar was triggered early in the session, another sign that volatility remains elevated despite recent regulatory steps to curb leveraged single-stock trading. In Shanghai, the composite was currently trading around 3,896, down about 2.4%. China shared the equity sell-off but not the bond sell-off. Its 10-year government yield has fallen to around a 13-month low as weak credit demand and softer domestic activity push money toward bonds. Zhongji Innolite fell about 9.5% to around 894 yuan, showing that AI optical hardware was caught in the global technology retreat. CNOOC was almost flat at around 33.55 yuan, despite oil holding above $90, making the energy producer a relative defensive outperformer. Unitree moved in the opposite direction. The humanoid robot maker surged nearly sixfold from its IPO price on its first day of trading. The debut coincided with the World Robot Conference in Beijing and highlighted robotics as both a Chinese industrial policy priority and a growing US-China technology battleground. The Nikkei 225 closed around 65,349, down just over 3%. Japan had its own rate pressure layered on top of the global move. The 10-year Japanese government bond yield has been near 3%, around a three-decade high, as investors weigh persistent inflation, heavy fiscal spending, and the possibility of further Bank of Japan tightening. The yen was around 159 to the dollar, still close to intervention-sensitive territory after Japan and the United States jointly stepped into the currency market earlier this month. SoftBank Group sank just over 10% to around 5,234 yen, the clearest Japanese casualty of the AI and duration sell-off. Advantest fell only about 1.7% to around 35,240 yen, outperforming the Nikkei despite its semiconductor exposure. Fast retailing was nearly flat at around 74,720 yen, reinforcing the split between high-duration technology exposure and more defensive index heavyweights. Today was not simply an Asia-wide risk-off move. It was a test of where high valuations, leverage, and index concentration leave markets most exposed. Korea showed the deepest vulnerability. Japan showed how domestic bond and currency pressures can amplify a global shock. China showed the opposite rate signal, but its AI hardware name still sold off. The open question is whether long-term yields now stabilize or force another round of cuts to crowded technology positions. Next, markets will watch the Federal Reserve's July meeting minutes and the US 20-year Treasury auction for signs that the bond sell-off has further to run. Subscribe to AJP for the next Northeast Asia market briefing. Thank you for watching AJP.